We got to think Fed or we got to think Omicron. It seems like the market is looking past Omicron at this point.
Yeah, good morning, Andrew. It's a great point. I think it's a bit of a perfect storm where you have an uncertain market due to Omicron coming into the ecosystem again, and the Fed talking about tapering a little bit more quickly and a little bit more furiously. But if I just look at the data, the data tells us that the economy is actually growing and it's getting stronger. The jobs number was a little bit muddled, but the unemployment rate is at 4.2%, which is an improvement. Manufacturing looks better. There's a lot of savings in people's bank accounts. We have consumers spending. So in my mind, it feels like the economy is growing, and so we don't need this excessive fiscal and monetary stimulus, but the market just doesn't like the uncertainty, and I think that the reaction is a little bit overdone.
Kevin, is Sylvia right? And if she is, what are you doing about it?
Yes, I definitely believe that Sylvia is right, because I think that the bond market last week priced in that the Fed was making a policy mistake. So what we're doing about it is we're concentrating on equities still. We're still constructive on equities going into next year. We have a barbell strategy in place as it pertains to value and growth. We like industrials, specifically machinery and the conglomerates. We like technology and the software and services part of the sector, as well as we like financials. And so we're maintaining our equity overweight in the portfolios, and we're looking for opportunities when we see these types of pullbacks in the market.
Hey, Sylvia, what do you think of the pullbacks? But one of the things we don't talk enough about, I think, is the month of December, especially with whatever you think this bill is in Washington coming, big questions about folks selling ahead of the end of the year for tax purposes.
Yeah, that's a factor. There are a couple of things that happen when you see these larger, let's call them market pullbacks across the board, including in cryptocurrencies. Number one, you have machine trading. So there are algorithms that are set where, once stocks fall below 200-day moving averages, for example, the machine may start to sell. Others will start to buy in that scenario. So I think you have some of that. The market was pretty good this year. It was up strong. So I think that some investors are taking profit off the table. Others are recognizing some tax losses for tax loss harvesting to offset some of their other gains. But, I agree with Kevin. I think the best thing, or the best way to sort of consider this, is if you do have money on the side, take a step back, take a breather. But a lot of the selling has been emotionally charged, and it's a really good opportunity to pick up some of the stocks that you haven't been able to get into. And the end of the year usually does come with a Santa Claus rally. So I think, now that might come off of a lower level, but I don't really see an epic reason for the market to continue to pull back now. So I would be buying here. I'd be picking my spots.